But again, this is a lot of people have lost a lot of money trying to guess the bottom, and it really is a dangerous game to follow. Looking at continuous contract on oil, that's continuous contract on oil, not the futures. It too has rolled over a little bit. It has made a new high here, and now it's been rolling over for a while. It probably needs a bit of a pullback here as well. It did touch right here, it did touch the RSI at 70 and became short-term overbought, and is starting to penetrate, the stochastics is starting to penetrate the 80 line, 75 line, and then it could easily go back to the bottom of the stochastic range, at which point we will want to buy oil again. Fundamentally, oil is going to not stay in the neighborhood of 40 or 35 or anything like that. Natural gas had a long, very long decline, then had this bounce, and is once again declining right here. I am not very crazy about the fundamentals of natural gas. From all I'm reading, there's a lot of oversupply of natural gas out there, more than we know what to do with at this point. So we could very well go back down to the twos or threes or 2.5s. Over time we could go down even further on natural gas. Natural gas will pick up once the economy really does pick up and start producing things. Until that point, natural gas could very well continue going. I was thinking of scaling into a position right about down here. I didn't get around to it. The market got away from me. I'm not going to jump into this market. Now if I see a higher high and a higher low, then that gives me the warm and fuzzies. Right now I don't see any warm and fuzzies here. Copper, another troubling piece. Copper has made a lower high, not yet a lower low, so we have a wedge formation right here, which is most of the time inconclusive, but this kind of a setup, this is similar to what gold did, and again this is trouble. And copper is what they call the metal with the PhD. So for copper not to have made a higher high at this point is again sort of reflecting a little bit of doubt on the recovery that the news has been trying to sell us. I didn't think this down here, like $1.25, was a good price for copper. I don't think the 225 was justified neither. There's some talk that that was basically driven by China looking at this $1.25 and rebuilding its stockpiles because it had run down. But once it reached here in the 225, 230 range, so on, China, which is of course sitting on an enormous amount of paper money that they'd like to get rid of, part of at least, just said okay, too expensive, and they'll probably wait until it once again goes down. So it's not really demand driven by economic output so much as it is demand driven by wanting to build some stockpiles, a strategic move, and those can take a long time to resolve themselves. Or as my friend Victor Adair likes to say, the market can stay irrational for way longer than you can stay liquid. And I do agree with that. I've been there. So that's all for today. Thank you very much for watching, and I'll try to have another update midweek next week. In the meantime, you can go to my website at oakwise.org and follow through what I'm doing. All the best and good luck.